UiPath stock just dumped 25% after earnings. They're down about 75% from the highs just a year ago, and their IPO price, or their enterprise value after IPO, is now cut in half. So you might know this is a Cathie Wood ARK Invest stock, so before you run for the exits, just hear me out because the business fundamentals are strong. The question we got to answer right now is whether the valuation post this drawdown is attractive. So let's go ahead and do that. My name is Bill Hawk. For those of you who are new here on this channel, we talk about stocks, crypto, real estate, anything relating to investing and making money. At any point in this video, should you receive some value, I'd really appreciate it if you hit the like button and subscribe, because it helps me out with the YouTube algorithm and it helps us create a community, which, by the way, you should join. The Discord link is in the bio, and also the newsletter. They're both free. From their about page, we see that UiPath was founded in 2005, based in Romania, which borders Ukraine, and in the odd case you didn't know, Ukraine is right now in a war with Russia, so that has an impact on earnings, which they mentioned. They started with a 10-person team, and the co-founders Daniel and Marius, these guys right here, are still on board, which is a critical point in my opinion. Their chief revenue officer, Thomas Hansen, this guy over here, just recently left the company to pursue other opportunities, which was regarded as a negative by investors. But really, after stalking his LinkedIn, I can see he's only been there for 2 years. He's had some shared experience with Microsoft, with the founders in the past, which is probably an asset, but I'm not trying to be mean here, but I don't think him leaving really is a significant asset that's lost to the company. So UiPath's goal is pretty simple. It's to build the world's best RPA software, and they want a robot for every person. What the heck does that mean? RPA, or robotic process automation, according to UiPath, is a software technology that makes it easy to build, deploy, and manage software robots that emulate human actions interacting with digital systems and software. Basically, it automates various aspects of everyday business, which promotes efficiency, so think cost savings, higher accuracy, and even happier employees. Basically, it's just a software robot, and it's best to understand this with real life examples rather than fancy words, of course, and you can see how it relates to healthcare, for example, claims processing, banking in terms of automated credit assessments, insurance, and whatnot. In finance, I've used RPA in the form of bookkeeping to make it automated. So for example, you might be familiar with Bill.com, which uses OCR technology, which basically automatically reads a document and scans it and tries to input it for you, which then gets checked by a human. So any RPA is probably best used with human checks and also AI. So RPA plus AI can create a fully autonomous organization, according to UiPath. All right, so what exactly does UiPath offer, and how does it make its money? Well, basically it's a SaaS, a software as a service, and users of this software, which are companies, can create their own robots and automate their own processes and customize it using the UiPath software. Now, this software is available in the UiPath cloud. It can be installed and used in a public cloud like AWS, for example, and it could also be used in a hybrid offline version, which is probably more useful for public entities. So these customers, they actually stick. They come on the platform, and they right now have 145% dollar-based net retention rate, which is really impressive in the SaaS industry, which means for every dollar they're spending today, they're spending $1.45 the next year, and so on. And their customers are very diversified across industries, and I'm confident that this list will continue to grow, but how fast, which is what we'll answer, so stick with me. UiPath considers ARR, or annual recurring revenue, as its key operating metric, which has been growing at 60% year over year. In the fourth quarter of 2021, this number reached $925 million, so almost $1 billion in recurring revenue. All right, now let's dive into the valuation, but before we do that, just a reminder that this spreadsheet is available to members of my email list and Discord. The links are in the description. I highly recommend you sign up because you can play around with the numbers, make your own assumption, and should you choose to invest in this, and of course, they'll give you more confidence and conviction. So the first thing you'll notice is I break down the revenues, or segment them by licenses, support, services, and other, to get total revenue over here, which in the year 2022, fiscal year 2022, which ends January 31st, they've had 900 million of revenue, and you can see that corresponds to their ARR of almost $1 billion. But you can see this is 50% growth, dramatically slowed down from 80% and 126% the year prior, and they're guiding to about 34%. And I'll be honest, when I saw that guidance, it didn't give me much confidence in the next years, because you can see here, I only forecasted 15% every year after that, which is a big slowdown. And I thought this was going to be disappointing, but with a 20% compounded annual growth rate, you'll see that they still have almost a 50% upside, which it was when I first did this spreadsheet, but their stock has gone up about 5% as I record this, with an 8 times price to sales ratio, which is what I feel comfortable giving them given the SaaS industry. And the comparative, which I found is to be the cream of the crop, is Salesforce. Now I did a video on Salesforce, which you can see, the link will be somewhere here. They have about a 24% upside based on my calculations for a period up until 2025, so a year less than this. So I want to first take a look at what that comparable will be should we choose to invest in Salesforce, for example, instead of UiPath, assuming these variables. And you can see now the growth or the upside in the stock price is about 26%, about the same as Salesforce. So then I would question, why would I not go with Salesforce, which is a much higher quality company than UiPath, because of how obviously how big it is, and of course better margins. You look at UiPath margins, their operating margins are still significantly negative. Salesforce, of course, I question their profitability, and I really don't know why they could turn the profitability on with a switch of a button. And they're led by, of course, a very strong leader, and they've made some solid investments which gives them profitability. So Salesforce is a strong company, no doubt, and I definitely would pick it up if it's at the same valuation as Path, which it is now. So that makes me question this whole thing. But I think Path, if you want to invest in it, you really have to think of this as a secular compounder and have a longer term horizon than these days over here. Because should we roll this out until 2030, for example, then you can argue that UiPath will of course outperform Salesforce, as it should. And that's why I think that the allocation matters. But I would probably just allocate to both. Why not? Aside from macro risk and customer risk, which I think are minimal because they are pretty diversified, so I don't see that as a huge risk, I think competition is one worth considering. And as you can see here, based on G2 and my own research, without being a user of the platform, which I will set as a disclaimer, their main competitors are Automation Anywhere and Blue Prism. And you can see here, which is consistent with what I found, Automation Anywhere is probably the bigger threat, which is a private company right now. So given that they're private, they likely didn't experience a slash of 50% in their enterprise value like UiPath did since their IPO. But based on comparable SaaS companies, UiPath is relatively attractive when you look at them from an EV over sales perspective. But there's a clear downward trend in SaaS names, however. So jumping in now, there presents some risks, and you would have to DCA or dollar cost average should you invest in any of these SaaS companies right now. So that's of course the macro risk, which I said I was going to ignore, but I really can't ignore it. All right, so for my concluding thoughts, overall I felt like SaaS names were very overvalued. Up until now, they're coming down in valuation, so I think they're reaching some sort of attractive levels. The other concern which I have with SaaS overall, with all of the companies I see there, is they're just not really prioritizing profitability. And I know that there's the argument of not prioritizing profitability in terms of growth, but with a company like Salesforce, I really don't understand why you can't maintain something like a 5% net income margin just consistently. They can do it, but they spend a lot on sales and marketing. And the other thing is they're generating free cash flow, which is why I don't give their DCF as much of a high weight. With a lot of stock-based compensation, I can imagine that employee morale in these SaaS companies right now are pretty low. I mean, if you've just experienced a 50% drawdown on your options, you're gonna feel like shit. It's just part of the game. I mean, that's not a huge concern to me because it's kind of the overall sentiment of the macro right now anyway. But I do think that UiPath is attractive if you want to be invested in this for a long time, which is what I said. But I do think that CRM or Salesforce is probably a lower risk bet, and I would probably make both. I think both are attractive right now. And the only reason why I bring up Salesforce is because I do think it's the highest quality you can find. And like I said, I think they can turn on profitability with just a switch. So I would probably go into both with a higher allocation into Salesforce. I'm just waiting a bit, looking at the charts right now and trying to see when the best time to enter is, because we just obviously shot up in the market. I'm waiting for it to cool a little bit and then start to make these entries and create positions in them. So I hope you enjoyed this video. If you did, again, please hit the like button, subscribe, join the newsletter and the Discord. I hope to see you on the next one.